Now, most superannuation funds offer life insurance to their members. Is that a good idea to take it up? Is it worthwhile?
Quite often it can be. Life insurance it's a bit of a topic at the moment with regards to what's happening in the industry and with all the changes in regulations. But Australia is chronically underinsured. There's been a lot of studies out there which clearly show that most people don't have enough life insurance, income protection, pretty much everything you need. And it's really, life insurance is pretty straightforward. If you're not here anymore, it pays some money to the rest of your family to allow them to move on. But life insurance inside superannuation works really, really well for a couple of reasons. Firstly, it's tax deductible. Okay, so the money goes into your superannuation pre-tax, and then you use that to buy your life insurance. So it actually makes it more affordable from a taxation point of view. Second thing is it's within your superannuation, so the cash flow is not going to affect you. So it's quite well studied and well researched that when things get really, really tight for people, one of the first things that people decide to get rid of is their insurance. And one of the reasons behind that is they're not getting any immediate benefit for that. You're paying this money in the hope that you never actually use this product. It goes. And all of a sudden something happens and you don't have any financial backup. So having inside superannuation actually protects that policy in the times if things actually get a little bit tight for you. There can be situations when a superannuation fund will automatically give you life insurance even if you've got some medical issues. Some of the downsides of life insurance inside superannuation is sometimes the policies are a little bit more complex. Sometimes they might be a little bit more simple in the fact they might not cover you for absolutely everything. And sometimes the insurance you have inside your superannuation is linked to your employment. So if you stop working at the organisation that's given you that default insurance, they might stop your insurance. And in some situations, you can't buy it back. So if you have become sick or ill or had something happen to you and then you leave your place of employment, you'll never get life insurance ever again.
Do you reduce your life cover as your superannuation goes up?
Typically you do. So I always describe insurance to people as something to cover a gap. So the first question I always ask is, if anything happens to you, what's your backup plan? What have you got to fall back on? And generally, as people move through life, their mortgage gets lower, their superannuation gets balanced, gets larger. They might buy an investment property, they might build up a share portfolio. Bit by bit, you're moving closer to a situation where you're actually self-sufficient. So if you could just hang up the gloves, not work ever again, and you'd actually have enough money, you don't need any insurance because you've got a backup plan. So as you move closer to that situation, your insurance needs to cover that gap will get smaller and smaller over time.
And as I've recently found out, update your insurance policies in terms of the type of policy you have because it's changed over the years. I had a life insurance income protection policy for 15 years. I've just been paying. And someone said, can I review your policy? I went, okay. And they said, this is such an old policy. I can get you the same coverage in a simpler policy for 30% less premium. I was stunned.
It's very important to actually keep on top of those things. So a lot of the changes with insurance companies, they're constantly moving the goalposts. So it's very important that when you do review your policies that you don't lose any benefits, which is something you have to be very, very mindful of. But what happens is as they're constantly reviewing their underwriting processes, they're finding ways of getting rid of people who they don't want to insure. And what that means is for the insurance company, for the people who are left, there's actually a little bit less risk. And to remain competitive, they're constantly just pushing the envelope with regards to what they actually charge on their premiums.
Good to see you, Brenton. Thank you very much.
Not a problem.